So, hello everybody, my name is Mark Gendral and today we will speak about the Bitcoin halving, what it is and why does it matter. Approximately every 4 years, miners' rewards are cut in half, slowing down the creation of new bitcoins and controlling inflation. Bitcoin has a fixed supply of 21 million coins, so each halving makes it more and more valuable. As you can see on the screen, halving is built into Bitcoin protocol. Miners' rewards are halved roughly every 210,000 blocks or every 4 years. As you can see from 2009, the reward was 50 Bitcoins, then halved by 25 bitcoins, and then again 12.5, 6.25, and from April 2024 it's 3.125 bitcoin per block. Yeah, and yeah, so this is basically how the rewards are working. Yeah, so every 4 year we got the half, approximately in not more like 10 minutes, which is timeline for one block. This ensures a predictable decreasing supply of new bitcoins, controlling inflation and making Bitcoin potential store of value. For miners, halving brings both challenges and opportunities. Lower rewards can reduce profits, especially with high electricity costs or older hardware, but often anticipation of price increases motivates miners to keep running their rigs. So let's have a look on the price impact. Yeah, this is the logarithmic chart of Bitcoin, or Bitcoin index. And as you can see, historically, Bitcoin halving has often led to price surges through the effect is not immediate. As you can see, from the first halving in 2012, we got immediately in 1 year increase in 10,000% in price. Yeah? Next, from halving in 2016, we got in around 500 days bull run in more than 3,500%. Yeah, and following in May 2020, as you can see, around 720%. As you can see, the percentage is decreasing because it's logically because in the market there is still year by year higher and higher market capitalization, which means that volatility of Bitcoin is decreasing in time. But factors driving this include lower supply, rising demand, market anticipation, and media attention. However, halving alone doesn't guarantee price increases. Global economic conditions and regulations also play a role. But as you can see, until now, there is a correlation between halving and price increase. Yeah? It means that in rising supply is still slower and slower, which means Bitcoin is more valuable, and it means that the price is rising. That's why price is rising after the halving. Maybe better visualization of halving and its impact on price is this chart, because this compares every bull run and let's say every cycle of Bitcoin after the halving. Yeah, as you can see, cycle by cycle, it's less and less profitable from percentage point of view, as I said. right? Of course, there is also necessary information to know that right now there is a circulating supply of Bitcoin, which is right now 19.91 million of coins. Maximum supply is 21 million coins, and this halving mathematics is predictable, which means that around in the year 2140, I guess, we can say the last Bitcoin will be mined. Yeah, but this is like future, right? Halving gradually reduces the rate new bitcoins enter circulation, right? As I said, 19.9 million coins have been mined, leaving just over 1 million to go. Yeah, and this creates deflationary pressure and can boost long-term investor confidence, right? Okay, and maybe you heard about the stock to flow model for Bitcoin, which is connected to halving, and a lot of analytics include this stock to flow model in analysis and so on. So, Bitcoin stock to flow model basically measures scarcity by comparing existing supply, which means stock, to annual new production, which means flow. So in relation to halving, each event reduces the flow by 50%, increasing Bitcoin's stock to flow ratio, which is this curve in the background. Higher scarcity, as indicated by stock to flow model, is associated with potential long-term price appreciation. To benefit from halving trends, a reliable exchange is a key, right? And Binance is a leading platform which with a wide range of cryptocurrencies, low fees, high liquidity, advanced trading bots, and strong security. Buying Bitcoin before or late after a halving can be a strategic move, but always consider market volatility and broader trends. So, to wrap up, Bitcoin halving is a unique mechanism that controls supply, motivates miners, and can influence price over the time. By understanding halving, investors can make informed decisions and potentially benefit from the scarcity-driven dynamics of Bitcoin. Yeah. So that was about the halving. I really hope the video was very informative, and we see us later. Have a nice day and bye.